When do I know if it might be a good time to buy a stock? When do I know if it might be a good time to sell a stock? Knowing this indicator can potentially help you answer questions like that, okay? So what I'm going to be doing here today, so I'm going to be using Tradingview, and I'm going to be using ticker symbol TSLA, which of course is Tesla. Looks like Tesla is down 4.2% today. So let's first start by talking about RSI. So RSI stands for Relative Strength Index, and it's going to be a momentum indicator that evaluates overbought or oversold conditions by measuring the magnitude or recent price changes for various assets. So let's first go ahead and take a look at where you find the RSI indicator here on TradingView and how you can add it to your chart. So first go to the top and find this button here that says indicators. Go ahead and click on it, and then go ahead and search for RSI. And then under technicals here, you should see the relative strength index. So go ahead and click on that. That will add it to your chart. So you can go ahead and close out of this now. So here we have the RSI indicator. However, we see that we have two separate lines. So the purple is the RSI. The yellow is going to be an SMA line. And so I only want to focus on RSI here today. So what I'm going to do is I'm going to go into the settings here, and I'm going to go ahead and hide that yellow line. So if you go to style here, you see RSI-based MA, so moving average, and you can see this is going to be the yellow line. So I just click here, and that'll hide that for me. So that way we're only focused on the RSI. Now, if we go back to input, this is where you change some of the defaults here. So for example, you can change time frame, which by the way, I'm using the daily chart. You can change the RSI settings. So RSI length by default is 14. That's one of the most common lengths. So I'm just going to leave it at that. And then if you are using your MA, your moving average, you can also change the settings here. So anyways, let's go ahead and click on OK. And let's take a look here at this RSI indicator. So as you guys can see down here, the RSI is displayed as a line graph. And this moves between two extremes, which is called an oscillator. And its reading can range from 0 to 100. So for example, the reading right here back on March 25th is around 65.3 for Tesla stock. Now, traditional interpretations and usage of the RSI dictate that a value of 70 or higher suggests that a security has become overbought or overvalued and that it may pull back. And so what's neat is that at that 70 value, there's a dotted line across the chart, as you can see here, right? So that you can instantly know where that 70 is. So again, generally speaking, the concept is that above 70, anything higher than 70, could potentially mean the stock is overbought or overvalued and that a pullback might be coming back. So, or might be coming, right? So if we take a look here on April 4th, looks like the RSI of Tesla was 73. So again, generally speaking, anything higher than 70 suggests potentially a stock is overvalued or that it has been overbought. Now on the other end here, we see that there's another dotted line down here at 30. And that is because an RSI reading of 30 or below is going to potentially indicate to us that a stock has become oversold or that it's undervalued and that it might start rising back up, right? So for example, looks like Tesla was a little bit under 30 right here on May 24th, maybe around 29 or so. So again, generally speaking, under 30 can suggest that a stock is oversold or that it's undervalued. And so that's generally how you read this and how a lot of people use it. The secret though here, okay, this is the secret, is that you want to pair this up with a strategy that's called divergence. And I'm going to be talking about two different types of divergence. So we're going to take a look at bullish divergence and we're going to take a look at bearish divergence. And some traders will say that using this divergence trading strategy is one of the most accurate strategies to use, okay? So first of all, what is divergence? Divergence is going to be a situation where the price candles, so remember these are the price candles up here, where the price candle top or bottoms point in different direction from corresponding tops or bottoms of the indicator's signal line. So the best way to explain this is to actually show you guys an example. So let's first start by taking a look at an example of bullish divergence. So if I go over here to the left and I just draw a line here, I'm going to go over to January 27th, so right here, and I'm going to draw a line here connecting some of these lows that we saw here. So if I connect some of these lows here, we'd get something that looks potentially like this, right? So as we saw, we got a lower low and then a lower low, right? Anyways, you can see that the direction here is pointing downwards, right? So this was in a downtrend. This line points downwards. Now, if I add another line and I add this line to the RSI indicator, starting at the exact same location that I added the line up here, and I end in the exact same location that I ended up here again, right? So if I go here, right, and I go ahead and plot a line right there like that, what do we notice here? We notice that up here for the price of the stock, we had this line connecting the lows that was pointing downward. Over here, when we connected this line here on the RSI indicator, which also connected the lows, which direction was it pointing? It was pointing upwards, right? It wasn't pointing downwards like up here. It's pointing upwards. This is an example of bullish divergence. And so bullish divergence is going to be characterized by a formation of progressively lower lows by the price candles, which we see over here. And if we take a look at the RSI, we see that the RSI, instead of forming lower lows, it formed higher lows instead. So again, we get this line pointing upwards and this line pointing downwards. And so the idea here is that after this happened, price here followed the line down here, right? Followed what the RSI was doing and immediately jumped upwards in order to correct this divergence that was happening, right? So this is an example of bullish divergence. Again, the share price was going in a downtrend, but the RSI was going in an uptrend. And so the share price immediately shot up again to correct this potential divergence. Now we also have bearish divergence, which is basically going to be the opposite of this, okay? So let's take a look at an example of bearish divergence. So let me go back further here. Let me go over to January of 2021 here for Tesla. So let's go over here, right here, okay? So again, I'm going to do the exact same thing here, but it's going to be basically the opposite of what you just saw. So a bearish divergence is going to be characterized by a formation of progressively higher highs by the price candles in the presence of progressively lower peaks formed by the RSI. So let me take a look here and show you guys an example. So I'm going to go to January 7th here of 2021, which is basically going to be right here, right? And so notice here what happened. If I go ahead and I draw a line here, or actually let me start here on January 11th. If I draw a line going like this, right, what do we see here? Right, we see this line again was starting to go upwards, right? It's pointing upwards here by connecting these peaks here. Now, if I draw another line down here on the RSI, exactly where we started, and I close it exactly where we finished, which is basically like right here, it looks like. What do we see here? Again, we see that these lines are pointing in different directions, right? Over here, when we connected the tops, the highs here, this was pointing upwards. And over here, when we were connecting the tops, where's it going? It's pointing downwards. So again, this is bearish divergence, characterized by the formation of progressively higher highs here in the price candles in the presence of progressively lower highs. And so what happened? Price followed directly after this to correct this divergence. So here, price sank back down, right, to follow what the RSI was doing and to correct this divergence that was happening in on the, between the share price here and the RSI. So this is what people will call a divergence trading strategy. Very simple, but a lot of the times very effective, as you can see here, right? If you had noticed this, you could see that following this, we saw a huge drop in price. Similarly over here, right, with the bullish divergence, what did we see happen after? Right, we saw a huge price movement upwards. Okay, so anyways, guys, if you have any questions about anything I just talked about, feel free to leave them in the comments section below. Check out the Discord, a link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.